What's going on, guys? Hamilton here with the Trading Initiative, here to give you a quick week rundown of what happened this week and how TTI is expecting the market to move going through next week and the end of the quarter. We're going to go ahead and start with SPY. It's going to be a very quick video. Let's go through the indexes and some of the things that we touch upon inside of TTI to give you a better understanding of some macro moves. SPY. We've been watching this level here in SPY near 405. We'd expected this previous higher high to hold during a drawdown, and it did in fact hold today. Not necessarily saying with utmost confidence that it's going to hold going into next week, but we did not cut our longs because SPY did hold previous long-term support. It's important to understand that the 200-day moving average is now starting to slope to the upside with RSI ranging above 50. This is very much bull territory within TTI. And as of right now, there is no real reason to expect a capitulation through this, but next week we could see completely different price action. As of right now, though, this is still very bullish for us, and we expect another series of higher highs incoming in SPY, with our eventual target being somewhere around those August highs, somewhere around 430, and you can also see there's a high volume node, so we expect significant resistance here, but we got to get there first. The next chart we're going to go over is QQQ, next major index here. Another one that held the levels here this week. I want to go ahead and focus in on this key level here, somewhere around sub 300, 295, something like that, 297. We expected this to hold. The 200-day moving average is flattening out. It's not necessarily curving to the upside yet, but the RSI is still above 50 and range bound. We love the fact that the NASDAQ closed within this zone and did not capitulate through. We did see some bullish moves off of or near the close on Friday. This is something that we are watching intently because we are overweight right now, growth stocks. Offensive names in the market, think tech, consumer discretionary, comms. This is very heavily weighted within the Qs, and we are long those. So we want to see the NASDAQ hold the support during the pullback on this latest shove to the upside, as we're seeing right here, and we expect another move to the upside here. We said SPY moving up to 430. We expect the Qs to hit all the way up here near those August highs at 335. We got to get there first, though. Let's go ahead and move on to IWM. IWM for us is the most constructive. It generally leads the market. As you can see, very nice uptrend here with a very tight consolidation, and it held previous resistance, now turned support. As a matter of fact, it didn't even get close end of the week here testing this. This is very bullish for us. We expect this to come up and test those August highs once again, just like every other index, testing around 200 to 201 before we expect some serious resistance. And we do like the fact that the 200 is now starting to slope to the upside. The RSI is up and over 50. Guys, all three of the major indexes are pulling back into significant resistance areas, now turn support. The last week has not been fun to hold longs, but this is not a break of trend. These trends started in October. They came up, oscillated down, came back up into a higher high, came back down and tested the previous resistance area, now turned support. And we expect them to hold and continue to bounce. We can't finish the indexes without going through Papa Dow here. Papa Dow for the old school traders is a better representation of the overall market, not SPY, not the S&P 500, but the Dow Jones Industrial Average. Over the last, how many days has this been? 86 days. We have consolidated tightly within this fractal. Every major money manager has this symmetrical triangle drawn. We are expecting a resolution because the trend is to the upside, upwards. Now, whether or not that actually tests all-time high, I have no idea. But we do expect a resolution to the upside. We did not get it on Friday. RSI very tightly bound around the 50. We do expect this to eventually resolve to the upside, but we'll see. The next area I want to touch on really quick is the DXY, the Dollar Currency Index. Now, listen, if you were trading over the last year and a half, you understand that as the dollar has been coming up, equities have been getting smashed. It's very negatively correlated. As the dollar rises, equities tend to get crushed. But since the equity market bottomed in October, the dollar has capitulated all the way down to 101, near 100, and equities have taken advantage of this. They have rallied since those October lows off of some dollar weakness. But recently we started to see the dollar bounce, and what we're looking at inside of TTI is this 105 area. We expect that this is going to come up and test that 105 area and hopefully bounce to the downside. If the dollar breaks through 105 and starts to attack the 200-day moving average, our bullish thesis is under attack. If the dollar is above 105 and starts to trend to the upside, this is the beginning of a potential uptrend, and this is something that could absolutely start to destroy the bullish thesis for everybody. Equities will take a hit. They took a hit over the last year and a half. I can't imagine a market where the dollar rising where stocks don't get crushed. Let's look at bonds really quick. If we go ahead and look at TLT and IEF, both TLT being your 20-plus year treasury bond. We did place, if I zoom in really far here, or really close rather, a bullish engulfing. Take that for what it's worth. We actually did close with over 1 RVol earlier today. We were talking about this. It was very light volume, but here it is, up and over 1 RVol. TLT bullish engulfing here. This is an uptrend. I do want to point out this is a series of higher highs. And with today's close, we have potentially placed a higher low. Now, Monday and Tuesday could invalidate this. We could continue to drop, but we expect this to continue up, test the 200-day moving average, and potentially break out. Unlike the Dixie, which moves up and stocks move down, we have seen a positive correlation between bonds and equities over the last year and a half. As bonds have been getting bought, so have equities. And so if this is a bullish engulfing and we do bounce here and potentially break up into new highs, that is very bullish for equities. But this is a canary in the coal mine type thing. Along with Dixie, we want to see bonds hold this level here and potentially bounce to the upside for continued strength in stocks. Let's go ahead and look at IEF. You're going to see a lot of the same characteristics here. Bullish engulfing. It's an uptrend, series of higher highs, and potentially a higher low here. If we come up and bounce and test this 200-day moving average and potentially break it, this is incredibly bullish for stocks, but it's a big if. Conversely, if you don't know, rates are going to move inversely from bonds. We're looking here at the 30-year Treasury bond. We're looking for a potential resistance area bounce, or potentially, since bonds gave us that bullish engulfing, the TLT, etc., a potential leg down into new lower lows. We would like the TYX, the 30-year Treasury bond, to break below the 200-day moving average. That would be a tailwind for equities and risk-on assets to continue their ascent higher. We can also look at TNX here, which is your 10-year Treasury, following the same sort of pattern as the 30-year. We expect this to break to the downside, potentially attack the 200-day moving average as it starts to roll over, and will be a tailwind for equities. But this is a big if. We want to watch this area right here with bonds. Did we just place a double top? I have no idea. We're going to know more on Tuesday. I think I said Monday earlier. Tuesday, Monday, the market's closed. So Tuesday and Wednesday, we're going to know if rates are actually going to drop, bonds are going to continue to get bought, or are they going to rally off of Friday's drawdown and crush bonds and crush equities as well. Last thing I want to talk about is the stocks above the 200-day moving average. Realistically, guys, we're still in a semi-bull market. I mean, I would consider this a bull market in general. Off of those October lows, I think this is a bull market. If we look at some equal-weighted ETFs, which I'm not going to do right now, we're already up and over the August highs of last year. We've already rallied plus 20% plus off of the lows. This is a bull market, but it's very weak bull market, and it's incredibly volatile. A little bit of data comes out and spooks the market, and all of a sudden we draw back and we give back about 3 days worth of profits. You know, it's incredibly hard to be trading right now, but as of Friday's close, stocks above the 200-day moving average closed at 66.2% of the market in the S&P 500. This is still bull territory. Not only have we rallied more than 20% off of the lows in the equal-weighted S&P 500, you can use ticker RSP to validate that, but also more stocks than not within the S&P 500 are trading above the 200-day moving average, and it's a start. As we say in technical analysis, we expect more good things to happen than bad above the 200-day moving average, and we expect more bad things than good to happen underneath the 200-day moving average. The fact that the majority of the market is trading above the 200-day moving average is still good in our book. And that's the video, guys. If you're inside of TTI, keep your eyes peeled for the Sunday night video where we go through the actual market internals. We look at market breadth, etc., sector strength, and industry strength. If you're not a part of TTI and you work a 9 to 5, you can't day trade. You just don't have enough time. Feel free to check us out. All the links are in the bio. We guarantee you will be a better trader in 90 days, or we will give you your money back. We are so confident in that. And I'll catch you in the next video.